Every month, I make myself a cup of tea, I open Trading 212, I invest £100, and I close the app. And then I get on with my day. The whole thing takes less than 5 minutes. I've repeated that exact routine every single month for the last 2 years. Now, if you'd asked me back in June 2024 whether 5 minutes a month would change my financial future, I'd probably have laughed. Not because I didn't believe in investing, because I didn't believe someone like me could actually stick with it. You see, this wasn't my first attempt at investing. I tried before. I got overwhelmed. I didn't really understand what I was doing, and eventually I stopped. But this time it felt different. I'd spent time reading, watching videos, trying to understand not just what to invest in, but why people invested in the first place. So on the 24th of June 2024, I opened Trading 212, deposited my first £100, and made myself a promise. No matter what happened, no matter whether the market went up, went down, or went nowhere at all, I'd keep investing £100 every month. And today marks just over 2 years since I made that promise. And in this video, I want to show you what happened. Not just to my portfolio, but to me. I'll show you every mistake I made, the moments I nearly gave up, the investment that restored my confidence, the lessons that completely changed how I think not just about money, but about growth itself. And finally, I'll reveal exactly where that simple 5-minute habit has taken me after 2 years. When people look at an investment portfolio, it's easy to focus on the end result, the value, the gains, the percentages, but every portfolio starts in exactly the same place, with a first investment. Mine just happened to be £100. Now, £100 wasn't some carefully calculated number. It wasn't chosen because an investing book recommended it. It was simply what I could realistically afford. I wanted to build wealth without putting myself under financial pressure. I still had bills to pay, life still happened, and investing shouldn't come at the expense of that. So I asked myself a simple question. What's an amount I could comfortably invest every month without needing to think twice? And the answer was £100. Looking back now, I don't think that decision was important because of the amount. I think it was important because it was sustainable. Too often we think progress comes from making huge sacrifices, saving every penny, finding the next big investment, trying to double our money overnight. But sustainable habits usually beat short bursts of motivation. It's no different to exercising or eating healthily. You don't transform your health with one perfect workout. You do it by showing up consistently, and I wanted this portfolio to work in exactly the same way. Not as a sprint, but as a habit. And at the time, my long-term goal was fairly simple. I wanted to build something that could one day sit alongside my pension and give me more financial security in retirement. But there was another reason as well. I wanted to educate myself, not because I wanted to become a professional investor, but because I wanted to understand money well enough to pass those lessons on to my child and the younger members of my family. Growing up, investing wasn't something we talked about. It almost felt like this hidden world reserved for people with lots of money. I wanted to find out whether that was actually true. Could someone starting with £100 really build something meaningful? I honestly didn't know. I set myself one simple target. If my portfolio could grow by around 7.5% a year over the long term, I consider that a success. That didn't sound particularly exciting. But this experiment was never about getting rich quickly. It was about proving something, that ordinary people could build wealth through ordinary actions. There's one thing I should probably admit though. When I made this first investment, I knew almost nothing. Looking back now, the difference between the investor I was then and the investor I am today is night and day. And as you'll see in the next chapter, that lack of experience became very obvious very quickly. If chapter 1 was full of optimism, chapter 2 was a reality check. I'd love to tell you that after making my first investment, everything just clicked. That I picked brilliant companies, stayed calm, trusted the process, and watched my portfolio steadily grow. But that's not what happened. Not even close. The truth is, for the first 6 weeks, I had absolutely no idea what I was doing. I'd spent hours researching a company, convinced myself it was a brilliant investment,
buy it, then watch it fall a couple of percent the next day, so I'd sell it. Then I'd research another company, buy that one, watch it fall, sell it. Without realizing it, I'd almost become a day trader. Not because I wanted to, but because I didn't yet understand the difference between investing and reacting. Every red day felt like I'd made a mistake. Every green day made me think I'd suddenly figured everything out. Looking back, it was exhausting. I wasn't investing, I was chasing certainty. And in the stock market, certainty doesn't really exist. I also made another mistake I think a lot of beginner investors make. Every time I researched something, I wanted to own it. It was a bit like walking into a sweet shop. Everything looked exciting. Everything looked like an opportunity. So naturally, I wanted one of everything. At one point, I owned close to 30 different investments. 30. In a portfolio that had only just begun. Looking back now, it's almost funny, but at the time, it felt like diversification. In reality, it was just indecision. I didn't yet know what kind of investor I wanted to become. So instead, I became every kind of investor at once. Growth stocks, dividend stocks, trending companies, popular companies. Anything that sounded exciting. I bought it. And that's probably why, only 6 weeks after starting, I seriously considered walking away. I'd made so many poor decisions in such a short space of time that I genuinely started wondering whether investing just wasn't for me. Maybe I simply wasn't cut out for it. Maybe I'd failed again. But then something happened. Something incredibly small. My first dividend arrived. It was worth 1 penny. Financially, it was meaningless. You couldn't even buy a sweet with it. But psychologically, it meant everything. For the first time, my portfolio had paid me. Not because I'd sold something. Not because I'd timed the market. Simply because I owned part of a business. I still remember looking at that payment and smiling. Not because of the amount. Because of what it represented. For the first time, investing felt real. That 1 penny changed the way I thought about ownership, and although I didn't realize it then, it planted a seed that would eventually grow into my passion for dividend investing. The next few months became less about chasing exciting stocks, and more about trying to understand myself. I started asking questions I'd never asked before. Why am I investing? What am I actually trying to achieve? Am I trying to get rich quickly? Or am I trying to build wealth slowly? These sound like similar questions. They're not. The answers completely change how you invest. Around October 2024, something else happened. I started discovering ETFs. At first, I wasn't completely convinced. Part of me still thought I could find the next winning stock if I just researched hard enough. Then I bought shares in Palantir. To this day, it's still the best individual investment I've ever made. Eventually selling those shares for around £160 profit. But here's the interesting part. Palantir wasn't important because of the money. It was important because it gave me confidence. For the first time, I felt like I'd actually made a good investment decision. After weeks of doubting myself, that one investment quietly reignited my belief that maybe, just maybe, I could do this after all. Ironically though, Palantir also taught me something unexpected. It made me realize I didn't actually enjoy searching for the next winner. What I really enjoyed was watching a plan slowly come together. That was the turning point. Instead of asking, which stock should I buy next, I started asking, what kind of investor do I want to become? That single question changed everything. Slowly, my portfolio became simpler, more intentional, less emotional. Then came 2025. Like so many investors, I watched markets react to uncertainty surrounding President Trump's tariff announcements. For newer investors, moments like these can feel terrifying. You open your portfolio, everything's red. Every headline tells you the world is ending. Every instinct tells you to do something. But by this point, something had changed inside me. A year earlier, I probably would have panicked. Instead, I made another cup of tea, invested my £100, closed the app, and got on with my day. A few months later, much of the market had recovered. That experience taught me something I'll probably never forget. Markets can fall slowly, recover surprisingly quickly, but your emotions almost always move faster than both. If I'd panicked, I'd have locked in those losses myself. Instead, doing nothing turned out to be the right decision. It wasn't exciting. It wasn't clever. It was simply patient. As the months passed, I gradually shifted more and more towards ETFs. By early 2026, I'd completely restructured both my growth and income portfolios. Not because ETFs are perfect, but because I'd finally understood what suited me. Low effort, long term, consistent. The investor I'd become over those 2 years looked nothing like the person who'd started. I no longer needed excitement. I no longer needed to check my portfolio every few hours. I no longer felt the need to chase every headline. Instead, I found myself looking forward to something much simpler. Making a cup of tea, investing £100, closing the app, and quietly letting time do the hard work. Looking back now, I don't think those first 2 years were really about building a portfolio. I think they were about building trust. Trust in the process, trust in the markets, and perhaps most importantly, trust in myself. Because once I'd learned that, everything else started to become much easier. So, after 2 years, 24 monthly investments, countless lessons, more mistakes than I'd care to admit, what did all of those 5-minute routines actually produce? Well, let's finally open the portfolio. Today, my Trading 212 portfolio is worth £3,126. Over the last 2 years, I've personally invested £2,480, which means the portfolio has grown by just over £646, giving an overall return of around 26%. Now, I know there will be people watching this thinking, that's not life-changing money, and they're absolutely right. It isn't. But I think that's exactly why this portfolio matters. Because this isn't a story about becoming rich in 2 years, it's a story about proving that ordinary people can build wealth from ordinary beginnings. Nobody starts with a 6-figure portfolio. Nobody wakes up one morning with decades of compound growth already behind them. Every investor, whether they eventually manage £10,000, 100,000, or even £1 million, has to make that first investment. For me, it was £100. And for 24 months, I simply refused to stop. When I look at this portfolio today, I don't just see a number. I see 24 promises that I kept to myself. Most investing isn't exciting. Most months, nothing extraordinary happens. Your portfolio might move up 1%, it might move down 1%. Sometimes it barely moves at all. But progress isn't measured by how exciting the month was. It's measured by whether you kept going. One of my favorite examples of this comes from the dividends this portfolio has generated. Over the last 2 years, this portfolio has paid me around £53 in dividends. Again, nobody's retiring on £53, but that's not really the point. Do you remember the first dividend I received? 1 pence. At the time, that payment felt ridiculous. Today, most of my dividend payments are over £1. Several are approaching or exceeding the £2 mark. Not because I suddenly found better investments, but because I kept giving those investments time. That 1 penny didn't become £2 overnight. It became £2 because it was given permission to grow. And I think that's one of the biggest misconceptions people have about investing. We massively overestimate what can happen in a few weeks, and massively underestimate what can happen over a few years. Today, the portfolio looks completely different. It's now built around a simple idea. Roughly 70% invested into growth ETFs, 30% invested into dividend ETFs. It's simple, diversified, and easy to maintain. Exactly the kind of portfolio that suits the investor I've become. Ironically, my best performing investment that I still own isn't an exciting technology stock. It's VWRL, a globally diversified ETF that probably wouldn't have excited the version of me from 2 years ago. Back then, I wanted excitement. Today, I value consistency far more. Although I do have to give an honourable mention to Palantir, even though I no longer invest in individual companies, I don't regret buying it, because confidence has value too. At the other end of the spectrum, the worst investments I've ever made all came during those first 6 weeks. Companies like Trump Media and several other speculative positions taught me expensive lessons. But here's the strange thing. If I could go back in time, I don't think I'd have raised those mistakes. because every one of them pushed me towards the strategy I use today. And if there's one thing these 2 years have taught me, it's that consistency has a habit of quietly outperforming motivation. Because motivation comes and goes, consistency simply keeps turning up. When I started this journey, I thought the biggest thing I'd gain would be money. Looking back, I think the money was actually one of the smaller returns. The biggest returns weren't measured in pounds. They were measured in patience, confidence, discipline, perspective. And after 2 years, there are 6 lessons that stood out above everything else. Not because I read them in a book, but because I had to learn every single one the hard way. Looking back, it's almost funny how much time I spent worrying before making that first investment. Was it the right platform? The right stock? The right amount? The right time? I wanted certainty before I started, but certainty never came. Eventually I realized something. The first investment doesn't need to be perfect. It just needs to exist. In fact, I genuinely believe the best investment I ever made wasn't Palantir, it wasn't VWL, it wasn't any other ETF. It was the very first £100. Because without that first investment, none of the others would have happened. When I started, I knew almost nothing. And if I'm honest, that scared me. I felt like everyone else knew some secret that I didn't. Every YouTube video, every article, finance podcast, every person online seemed completely confident. Meanwhile, I was wondering whether I was buying the wrong thing. The truth is, nobody starts as an expert. Everyone begins somewhere. What matters isn't knowing everything before you begin, it's remaining curious after you've started. Those first 6 weeks were full of mistakes, but every mistake taught me something. Sometimes experience is simply another word for tuition. Before investing, I would have described myself as quite a patient person. Now, I realize I wasn't. Not really, because investing exposed a different kind of patience. The patience to do nothing, the patience to let time work, the patience to ignore headlines, the patience to accept that meaningful progress often feels invisible while it's happening. That's true in investing, but it's also true in life. Whether you're trying to get fitter, learn a language, build a business, or save for retirement, progress rarely arrives in giant leaps. It's almost always built through small, repeated actions that don't feel particularly important on the day that you make them. Investing didn't teach me patience. It expanded my understanding of what patience actually is. I used to think seeing my portfolio in red meant something had gone wrong. Now I see it as part of the process. One of the biggest turning points came during the market correction of 2025. The headlines were everywhere, markets were falling, people were worried. 2 years earlier, I probably would have sold something. This time, I made a cup of tea, invested my £100, closed the app, and carried on. A few months later, much of the market had recovered. That experience completely changed my relationship with volatility. Markets move, that's just what they do. The real danger isn't the market, it's allowing your emotions to make decisions your long-term plan already answered. Having a goal and having a plan makes staying calm infinitely easier. When I first started, I found myself looking for the next 10-bagger. The next company that would change everything overnight. Eventually, I realized I'd been thinking about growth completely the wrong way. Not just in my portfolio, but in life. These days, I'm no longer looking for giant leaps. If they happen, that's wonderful. I'll happily accept them, but I don't expect them. Instead, I trust small, consistent improvements, whether that's investing, fitness, learning, my career, or being a better parent. Big moments are exciting. Small habits, though, are transformational. That's probably the biggest lesson investing has ever taught me. If you're wondering how to keep investing every month, the answer isn't discipline, it isn't willpower, and it certainly isn't motivation. Because motivation comes and goes. Some months you're excited to invest, other months life gets in the way. Bills appear, work gets busy, the markets look terrible. You don't feel like doing anything. That's why habits matter. Every payday I make a cup of tea, open trading 212, invest £100, and close the app. Then I get on with my day. The routine is so simple now that I barely think about it. It's no longer something I have to remember. It's simply part of who I am, and perhaps that's the biggest change over these last 2 years. If someone watching this is about to make their very first investment, I hope you don't compare your beginning to someone else's middle. You don't need thousands of pounds. You don't need perfect knowledge. You don't need to find the next superstar stock. You simply need to begin. Because one day, you'll look back and realize that the hardest investment you ever made was the smallest one. When I look at this portfolio today, I don't see an end result. I see the foundations of something that I hope will still be growing 10, 20, even 30 years from now. That's the beauty of long-term investing. The longer you stay invested, the harder time begins to work on your behalf. So where does the journey go from here? Well, for now, very little changes. Every month, I'll continue making my cup of tea, opening Trading 212, investing my £100, and then getting on with my day. Eventually, once I've cleared up some remaining debt, I plan to increase that monthly contribution. Not because I suddenly need to, but because I'll finally have the capacity to. The process won't change, the amount simply will. As for the portfolio itself, I don't see any major changes on the horizon. After 2 years of experimenting, making mistakes, buying too many stocks and learning far more lessons than I expected, I've finally built a portfolio that reflects the kind of investor I actually am. Simple, diversified, and low maintenance. Designed to quietly grow in the background while I focus on living my life. Could I make changes in the future? Of course. Investing is a lifelong journey. There will always be something new to learn. New opportunities, new challenges, new mistakes to make. But unless something fundamentally changes, I'm happy letting the strategy do exactly what it's designed to do. Looking ahead, I have a few milestones I'd love to reach. Within the next 2 years, I'd like this portfolio to grow to around £7,500, and longer term reaching £10,000 would be an incredible milestone. Not because £10,000 is some magical number, but because it represents another promise kept. Another collection of small monthly decisions adding up into something meaningful. On the income side, I'd love to see this portfolio generate around £250 a year in dividends over the next couple of years. And eventually, one of my favourite goals, an average of £1 a day in dividend income, £365 a year. Again, not because it changes my life overnight, but because it demonstrates something powerful, that small amounts, given enough time, can become surprisingly meaningful. I'll keep making the monthly portfolio updates, not because every month is exciting, quite often it isn't, but that's exactly what I want people to see. Real investing isn't exciting every month, it's repetitive, it's patient, it's often uneventful, and somehow that's exactly what makes it so powerful, because every single month becomes another page in a much longer story. A story that, hopefully, we're only just beginning.